following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 22nd wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having an extraordinary day. Let's make sure we do everything we can to get everything out of our Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to throw at us. Today, we'll go take a look at the circumstances that the bulls and the bears are throwing out to you and I. We'll do our best to determine what it is that they're signaling in the markets. We'll look at different time frames out there. Mostly, this is the most important thing of the day. I'm grateful for your presence here. Now, I'm here to serve you. I would have to say that is equally as important because I am here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out at 727-445-1044, especially on this wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 84 points. She's trading out at 17,835. S&P is off 6 points. That's trading out at 2112. Composite down 37 at 5170. Russell is up 2 points at 1256. DAX closed down 84 points. The FTSE off 101. Gold's back $10 right now. Silver is flat. Light sweet crude is up 21 pennies out there. And we've got lots to go take a look at. So let's begin by understanding what the market did last night, because let's start off by taking a look at what's going on with regard to our opening range today. Let's just simply start here. Let's pull this off to the side. Now, if we take a look at our opening range, we can see that prices move. This is between the 9:30 and 10 a.m. time frame. All we're doing is looking at the bottom, the low that occurred, and the high that occurred. Actually, in this case here, I should pull that just a tad lower. So we're looking at the price level between 2103 and a quarter. Where into this bar, and 2110.75 as we take a look at the ESPN. So we've got about a $7.50 range that we have been trading in. Now, what price tried to do, and we're just trading away. So most of the activity took place last night after the bell, a little bit of activity earlier this morning. But basically, we're trading in a relatively narrow range for the day. This is looking at a 5-minute chart out here. We can see that there's absolutely no volume inside of the move to either side, in either direction out here. We know that there's been no breakout to the upside and no breakdown to the downside. So, something to think about. And anyway, that's what's going on as we take a look at it. This morning, inside of the Tiger's Den, right around the 10 o'clock time frame, I believe, what I wrote into the den, I'd have to go back and take a look at exactly. I won't, because all I have to do is really look at my charts out here. What I gave was, as the market was bouncing this morning, I gave the line of demarcation, the battle that was taking place in the market, where we could determine whether we were going to see a turnaround Tuesday or some name that we've got to come up for a Wednesday out here. And we're taking a look at the NQ. This is our 6-panel view of the NASDAQ futures. The upper left is a 30-minute chart. The dead center in the upper portion of the right, that's the 120-minute chart. Off to the right in the upper right-hand portion, that's our 240-minute chart. Lower left, 300-minute, 5-hour chart. In the center, daily. To the bottom right is the weekly chart. Now, what I was looking at was really 4 of those charts, the top 3 and then the lower left. And you'll see a little purple line in there, different moving averages on different time frames out here. And we can also see we've got on our 300-minute chart out here, our TAS market profile low. Old support that failed that support and then can act as resistance. And that's what it's done so far. And what I put in there was that if we could see a close above, I'm thinking the number was right around 46.28. if we could see a close above that level, a close, then that would suggest that the sellers, the bears, have just simply lost control of the market. Instead, that area acted as resistance. Now, the NQ, the reason that we're taking a look at the NQ as we speak right now, and I'll switch over, we can take a look at the S&P futures as well, is just simply because of the impact of all of the earnings that came out after the bell, the weighting of Apple, and it's with regard to the NASDAQ, to understand what exactly was going on out here, or what is going on, or levels that you and I need to monitor. So what we have seen here, on a day when the market just absolutely should have blown apart and fell apart, it hasn't. As you and I were looking at the 5-minute chart there for the ES mini, we haven't seen much in the way of volume. It is summertime. It is July 22nd, after all. It is the middle of the week, so you've got a lot of folks that are certainly on vacation. But that 46.29-ish area is a number for us to really, 46.30, somewhere right around there is the number for us to be paying attention to. If you see the NASDAQ close above that, for whatever reason whatsoever, that will tell you that the buyers have regained control of the market. At this stage of the game, nada. It's not there. In fact, if I switch over, we'll just take a look at the ES mini out here. So we'll put the S&P futures up on our screen. I may have given out those numbers as well earlier this morning. You can see those same purple lines. You can see how they've held as resistance, as well as, if you look in the lower left-hand corner, price never fully got up to the 2114 area, but it's a 2114 level that I would use to determine whether or not the S&P futures, the ES mini, is back in control of the bull's hands. As we speak right now, the answer is it is not. Now, at this stage here, is it truly in the hands of the sellers and the bears? And I would say, yeah, sort of. Boy, is that conviction or what? If we look at the lower right-hand portion of my screen, the weekly chart here for the ES mini, you can see that price has still been able to hold that 2104. In order for sellers to really ramp things up here, you're going to need to see price close below that 2104 level. That does not mean that they're not in control right now, because they are. I can't argue otherwise. They absolutely are. But, have they been able to show any kind of conviction to the downside? The answer is no. So what does that actually mean out here? What it means is that now if we take a look at our daily view, and I'm going to switch over, take a look at the S&P contract first. And as we take a look at it, today was the opportunity for there to be really a wide-ranging bar to the downside. We've seen, 2, 3, 4 wide-ranging bars to the upside after coming off the low of July the 7th out here. And so if anything was truly going to ramp up to the downside, if we were back into scary situations, then that's what we would have seen. So what I expect that we're going to see take place inside of the market is we're going to see the S&P. It's just simply making a retracement. If we take a look at that retracement, different retracement levels out here, it's making a retracement for the next buy during this summertime rally that is underway. That began last July. If you were to ask me where is it that we're likely to see price move down into, I'm going to say it's right around 2102. Whoops, didn't mean to grab that. I don't know how that happened. Right around 2102, which would not even be a dead cat bounce on a pullback. You see, just a 0.382 retracement inside of the market gets you back to 2098. 2098. Look, the bulls are actually, if you're bullish out here, and for me, it's not a matter of being bullish or bearish. Right now, I'm on the short side of the trade. I told you yesterday, my clients and I, we sold, not at the absolute high, but pretty darn close to the absolute high, and we took the short position. But it is a short-term short position because of other messages of the market. Now, I am looking at, I'm going to share with you a couple things out here that are absolutely scary. There's one that took place yesterday. If you were listening to yesterday's show, I'm not going to go ahead and repeat it, but when I pulled up some of my divergence charts that was asked by my good friend Z, our good friend Z in the Tigers Den, when he asked me, hey, what is it that I would be looking at? This was as the market was moving up last week. What is it that I would look at that would change my tune? And when you and I went to a couple of divergent patterns yesterday, really, I had to take a deep gasp of air because I was like, oh, how did I miss that? because I did miss it. Because I did not see it over the weekend. I did not see it until yesterday, and I was like, "Holy cow!" So one outcome that I was planning on before I even saw that, as I saw the market expected it. On Monday, I said to you that the market is getting ready to take a timeout here. So it is taking that timeout. One thing that I'm looking for is a pullback in around 2102, 2098, 2102. I'm not going to get too caught up into the numbers. If price can pull back there on light volume, if we can pull back there with small-bodied candles, do it over the course of the next couple of sessions out there, this could actually be setting up a huge A to B equals CD to the upside. But let's not get caught up into the patterns. What I am saying is that my original expectation as of several weeks ago was that the market would move up in through August, and that still is in play. Now, there are some things that can absolutely get in the way out there, and I want to go over there and take a look at what those could be. Now, the first place where I was taking a look at where that could be out here, and I posted a question in the den because I wasn't sure. I didn't get a chance to listen to much of the shows here this morning, kind of off in the background here, and I didn't know if anybody had really talked about the island reversal patterns. And the first place that I took a look at inside the indices out here was the NASDAQ composite, because we did have a nice gap down into the NASDAQ composite out here. Now, that gap has been filled as we speak, but that gap could have created an island reversal pattern at all-time highs out there. Now, with regard to candle formations, there is nothing more bearish at highs, all-time highs nonetheless, than an island reversal top. Likewise, there's also nothing more bullish than at the lows, and it doesn't have to be at all-time lows. It doesn't have to be at all-time highs out there. But when it is, the sphincter muscles got to just say, what the heck is going on here? Now, because of the gap down that we saw inside the NASDAQ composite, the key number here was at 5183.23. We've actually seen an intraday spike. So what was going on inside the marketplace out here this morning as futures were moving up off of the bottom, as the market had opened and was being pushed higher, we saw price actually get up to 5184.74. So no island reversal pattern inside the NASDAQ composite if we're going to be accurate with regard to the actual pattern. But of course, I then said, now I just did this here during the past, as I was setting up 5 minutes before coming on the air. But what I did was I said, well, if that's what's going on inside the NASDAQ composite, what's going on inside the XLK? And so this is kind of interesting out here, because inside of the XLK, as we speak right now, that is an island top. That is an island top after, I don't know, did it actually get to an all-time high out here? July 20th high was 43.81. Previous high was 43.81. No, so it was, it was a test of a swing point. Was it with volume or light volume? With light volume out there, rejected that area. But you do have, an island top reversal pattern. Now, this is going to be really important for you and I to pay attention to and to focus on. Now, the reason that I bring that up is because, well, we're going to have to go to break. And I'm just going to have to share with you the reason why after break. That means you got to stay with me, which you were going to do anyways, because of the love that I have for you. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 84, S&P down 5 points. Okay, so we're taking a look at the technology sector, the XLK out here, which in fact does have a valid island top formation, at or near all-time highs out here. And what the island formation is, folks, is where you've got a gap up and a gap down, and you've left a set of passengers stranded out here. Now, if you take a look at the trading day between July 16th and July 17th, that probably was the Google day, I'm going to guess, July 17th. The 16th must have been when earnings came out, and you saw a nice gap up, 7.7 million. We don't really care about the volume at this stage here. We saw a couple of days here where price moved slightly higher, sideways, and then we saw the gap down today. And as long as price does not get up to the point of 43.09, it's a valid island reversal. Likewise, and what does that say? Well, it's the most bearish pattern that you can find when it comes to technical analysis. And as we come back and we go into the 2012 time frame, what you're going to see is an island bottom formation as soon as we can get back to that time frame out here. And so it is one to pay attention to. Come on, populate. I think I have too many I was putting a number of different indicators that I could just simply pop up onto my chart out here, and I can see it's kind of bogging down the system out here, so my apology for that. But if you take a see, and this is, again, these island tops and bottoms do not have to occur at all-time bottoms, all-time highs out here. But if you take a look at the trading days, we're going back to the time frame of May 31st, June 1st, June 4th, and June 5th, and June 6th. So we had a 5-day period of time. The gap down between the May 31st low, which, by the way, was 27.73. The high of the next day was 27.61. So you got a gap out there. And then when we saw the gap up, we're looking at the high of 27.56. So 56 is below 73. Right, that was the first gap. And if you take a look at the actual low of June 6th out there, that was a 27.71. There was your island bottom reversal that went ahead, and we saw, an expansion of price. Was it a 1.272 expansion between swing points out here? I don't know. Let's go take a look at it. What was it? It was a 1.272 expansions of swing points out there. Now, I'm not suggesting that that's what this one means, but it does mean we really do want to pay attention to the XLK. Now, as you know, whoops, what the heck did I do there? As you know, there is nothing more. Now, that's a bearish pattern, without a doubt, without a doubt. Remember, and it's likely to stay a island reversal formation pattern today. But if, in fact, that gets taken out, and by taken out, I don't mean the pattern gets voided by just simply getting up and closing the gap and testing the 43.09. I mean, if price gets above the high from July 20th out here, 43.81, I don't care what you believe about what's going on in the economy and any place else in any fundamentals. Check all that stuff at the door, because there is nothing more bullish than a failed bearish pattern. And inside the technology sector, inside the XLK, okay, there is nothing more bearish that I could find out here inside of the market than other than the pattern that's set up right here, right now, as Tom likes to see. There was a question if I could go take a look at Google. So let's go Google over Google. I do like that movie out there with who are those two characters? Well, what's that? Google Intern, the Intern. There's a couple of great scenes and quotes in there. So to me, that's always a fun movie to watch. If we take a look at Google now, I'm looking at Google and also Google and Google out here. But Peak D, you didn't tell me what it was you wanted me to look at it for. And so as I take a look at it, I don't know what is. So if we're going to try to apply different tools to this, where could this go? Things like that. I could put basically this trend should be coming into an end. Here's a little trend tool out. Maybe somebody typed in what he was looking at. Has it made 2A? BC. If we take a look at the A to B equals CD pattern out here, we'd start with the low from January 12th. That'd be your A point. Your B point is out here on the trading day. It looks like on March the 5th. And the C point down here, it looks like that hammer candle on July 7th. And the answer is no, it has not made a 1 to 2. And yes, it has gone past the 1 to 1.618 level. So it would suggest to us that the next move out here could be up to about the 695 level. But this trend is coming to an end. If I just take a look at one of the trend tools that I popped up on my screen out here, where you've got trends that begin. And the last trend signal that we saw where it said, hey, the trend was beginning, was right back in this time period here between about June the 1st and June the 9th out there. And in fact, we did see that trend with the trend to the move to the upside. So I'm not sure what else is a reason. There's a big gap out here, and maybe the gap eventually gets filled. But hey, until this forms an island bottom or an island top pattern out here, I don't see a whole lot inside of Google. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allowed traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And so that island reversal that we saw inside the XLK, of course, that does mean that inside of Apple, that's what we also have as well. In the case of Apple, July 17th through the July 20th over the weekend, we saw Apple go ahead and gap up. We then had a, not a key reversal day out here, but you did have a bearish and golfing candle on July 21st. Now the gap down. So you've got an island top out here, and they close above that high in Apple from July 21st, 132.92. That says that price will go ahead and at least get up to that high volume high out here, 134.54 from April 28th. If we take a look at market profiles on the daily basis out here, we can see price never even made it down to support this morning. That would have been down at the low of that box at 121.54. You're trading at 124.99 as we speak right now. Now, with regard to what's also interesting here inside of the market, this gives you a bit of a feel for where the next move might come from. These are two 30-minute charts here for both the NASDAQ and the ES Mini. The top portion of my chart is the NASDAQ 30-minute. The bottom portion of my chart is the S&P futures contract. And what we can see in both instances, as price was moving down, let me get my cursor out here, and we're looking at the time period of 9:30 this morning. So even as the futures were pushing down this morning at 9:30, what you and I can see is they were pushing down with less energy. In the case of the ES Mini, it was really pushing down into the 8:30 a.m. time frame, forming what looks like a little doji, and it is a doji, but it's also a hammer candle at that time frame out there. That low has held as support, and then you saw a big rushing in of buying out here, big wide-ranging bar, in where it ran into resistance is that little moving average line out here, both inside the NQ as well as inside the ES. So inside the NQ right now, that number is 46.29. The ES is 21.10, and any closes above that. And I would say at this stage here, because we've got a 30-minute market profile, I'd really go ahead and up that to the top of that, which is 46.3650 inside the NQ and 21.11 even Steven inside the ES Mini. That is what the buyers have to overcome in order to really be able to reverse this market. Now, this is one of my favorite patterns inside the market because it does a good job of just simply being able to call tops and bottoms out here. And at this stage, this is calling a bottom. Now, when these don't work all the time, but they are just simply terrific patterns. Now, these patterns here that I'm showing you, even though we're on the 30-minute time frame, these are the ones that called every single major market top out here. Every single one. You can go back and take a look at the stars and the skies and other things out there, and you should pay attention to it. Heck, I use 2 lunar strategies out here that work. They're the most amazing things that I have ever seen out here. But with regard to really calling market tops and bottoms out here, that pattern that I just showed you is the best. It's absolutely the single best pattern that's out here. Now, when the market was making its high yesterday, what the NQ was doing, you've heard me talk about this. I love Basil Chapman. I love the Chapman way. But what I mostly love, we've got a guy that is in the Tiger's Den. He's got the name Peak D. If I were going to change my name out there, you would call me Peak G, because G is the one that I love. I love to sing in the key of G out there. I'm not even sure what the heck that means, but I do love the key of G when it comes to taking a look at the beautiful harmonic patterns inside of the market. Because oftentimes that's where you see your biggest reversal. They are the actual easiest patterns to trade because your stop is just simply one tick above the high of that. If it gets taken out, doesn't mean that things can't reverse, but it is the coolest trade that is on the planet. At least the planet that I live on. And take a look at what happened here. And it was one of the reasons why we went ahead and immediately shifted from long. As you know, we took care of playing that long, that expected long when Greece was falling apart and Europe. That was a sideshow. It was an absolute sideshow out there that was doing nothing more than giving us a nice opportunity for a nice big move higher. As we said, we took a look at a number of different technical patterns that said the market was going to go back up to its highs, the composite most specifically. So now at this stage of the game, we've actually gotten down to a fourth wave to the downside out here this morning. So as price was moving down, big old bearish engulfing session. We don't have on the 120-minute chart a price relative strength divergent pattern. You don't always get everything, but when you do, you want to be paying attention to it out here. It's 46.30 is what it says price has got to get above in order to change back into the bullish mode out here. So again, all of the messages, even though that 30-minute chart says, hey, there ought to be a bottom, I see where the tug of war is. I see where the battle is. I still expect to see price pull back a bit further over the course of the next couple of days out here. But I'm open to waiting for the market to reveal to me what it is going to do out there. So that's what is going on with regard to messages that you and I can read. Now let's go take a look at some of the other messages out here. Ones that you and I pay attention to. Let's go take a look at the price oscillators. If we take a look at the New York Stock Exchange, absolutely has been pushed down yesterday. In fact, it closed just slightly below zero. We're seeing a bit of an extension of that, but not anything significant. If I were to take a look at net declining issues as we speak right now at 140, let me go see. It doesn't look like there's a whole lot of damage. 416. That's nothing. out there with regard to technical damage. That still doesn't matter. What it does tell us is who still has the ball in this football game. And who has the ball in this football game right now are the sellers. They are struggling, they're really struggling to get any kind of momentum going. We've got really small-bodied candles on the way down when we take a look at the New York Stock Exchange. There's lots of people that are really attacking the NYSE out here. And I'm saying the NYSE has given us really good messages that the market wants to actually move higher. Now, that price also has to get back above zero. What it has done, heck, I haven't done anything. What it has done is gotten close to the dead cat bounce of 0.382 retracement, 10,875. There's no reason for it to not pull back to 10,779. And I know this market is frustrating the heck out of folks out there. Don't let it frustrate you. Come on over, check out my newsletter service, Mastering Probability. You can do that by going to the homepage at TFNN.com. You get a free 30-day trial out here. It comes with a money-back guarantee, and I will help to unconfuse you. We'll just simply tune out all of the other stuff and just really pay attention. We'll just play the game, because this is nothing more. This is a game. If you were going to start, and you're going to teach your children about technical analysis, the most fundamental thing when it comes to analyzing what a stock or a market, whether it's an index, a commodity, it doesn't matter. If you were going to teach them, you would teach them how to play this just as they would anything else on, some iPad or pinball machine. In fact, for those of you that, for those of you that are in my age category, you probably remember playing a lot of pinball as a kid, up at the SS Kresge's out there, with a nice little slush, right? I didn't care much for those Coke slushes, but I did like the cherry slushes out there. Playing a bunch of pinball or maybe a bunch of foosball. That there's patterns out there, right? Well, it's no different here inside the market. That's what you and I take a look at. Inside the Dow, the price oscillator now is down below the zero line. So we have some unanimity. Is that even a word out there? We've got where everything is lined up here, where sellers are in control. And that just means that we should see prices continue to move lower. I know where the battles are for us to watch. I want to see those battles inside those 30-minute charts fail. To then give me another piece of information that level that I was giving to you in the S&P, that's where we would see price pull back to. But I'm also open to the fact that sellers have not been able to do a whole heck of a lot today, and we don't see much in the way of volume. We'll go take a look at the index ETFs in a bit as well. If we take a look at what's going on inside of the VIX index out here, not a whole lot. So now what does that mean? I will tell you what it means. It means there's plenty of liquidity. That's really when Stevie looks at the VIX index, you just pay attention to that 50-day exponential moving average. Prices below the 50-day, it tells you there's lots of liquidity in the marketplace. It's a liquidity gauge out there. And this VIX index here says there is plenty of liquidity. The secondary liquidity index gauge that you want is always going to be the Euro-Japanese yen. What is it doing as we speak right now? We saw it moving higher yesterday. We took a look at a little divergent pattern that's out here. But today, not doing a whole lot, really mostly moving sideways. It hasn't given up the ghost or anything along those lines. So why should the market give up the ghost as well? Had a request to go take a look at Netflix NFLX. So let's go take a look at it, NFLX, and tell me, J&J, as I take a look at it, what is it that you're doing? How can I help you out? And folks, if you haven't had a chance to go check out our Tiger's Den, come on over to the homepage of TFNN.com. We'd love to have you in there. Because there is a terrific group of people out here that will just simply be there to assist you along the way. Do I see upside potential? Thank you for asking that question. Well, what we have inside of Netflix is we had a nice gap up with some volume back on the trading day of July the 16th out here. Is there upside potential? Let's go take a look at a longer-term chart for Netflix out here. And as we take a look at Netflix, just an absolute skyrocket. We're waiting for, this is the monthly chart, we're waiting for the monthly chart to populate to go take a look at volume. And as we take a look at volume, the bar that you and I want to take a look at is September 1. That September 1 bar had 268 million shares. And as price moved through that, talk about wide price spread, accelerated volume, getting past a swing point. Netflix is the ideal picture of that. In fact, if we were going to write a book, you and I, J&J, we would come out here and we would say, whoops, I didn't want to do that out here. We wouldn't say, oops, I didn't want to do that. What you and I would say, this is the perfect textbook definition. What the heck am I doing out here? This is a perfect textbook definition of a equity that took out a swing point with price and volume out here. Wide price spread, accelerated volume. I'm going to try to do it one more time, and that is I'm trying to get down to the low. Looks like in September of 2012. There, good, we did it. And we're going to come all the way up here. Let me see, that had what? 318. This one, the actual swing point, 268. So we're going to use the high from September 2014. And it looks like our C point, let's see, the low, 4508. Yeah, it's going to be 4508. It's going to be down on December of 2014. That's going to be our C point. So 1 to 1A to B equals CD. That gets you to 107.40. You're at 111.20. 111.28 out here. There's no reason why Netflix shouldn't try to make its way up to 124.35. So while we're still in this summertime rally phase out here, the expectation would be that Netflix could make it all the way up into that 124.35. I don't know, quite frankly, that is really a worthwhile trade when you're trading at 111 on a stock like this, and you're looking at about a 13-point reward when you've got a gap, for it to pull back and test the bottom of the gap around $97. I don't know that that's really a worthwhile trade. There's most likely better things to look at out there, but that's my, at least my initial take here inside of Netflix. I'm not seeing anything that suggests. Let me put one other chart out here. Let me try to put one other indicator on the tool. This does say that the trend inside Netflix, is coming to an end, coming to a theater near you, but it still may have enough energy to get up into that 124 level. A question, if I would go take a look at Chipotle, CMG is the ticker symbol. That is dealing with a swing point out here. Let's go take a look at that swing point, and that is this is one heck of a move right inside of Chipotle. Now, the swing that it's dealing with is from the trading session of January 8th. Now, let me just pull this over. It'll be easier for you guys to actually take a look at. So now we'll come back into January 8th. If you're looking at my little window in the right-hand side, January 8th, it shows you what the volume is. Shows you that so far. Well, shows you the lower right shows you the volume, 2.4 million shares. The day that you and I are taking a look at on January 8th only had 1.1 million shares. So you've moved up into a swing point with volume. Now, here's the deal. 727.97 is a number where price has to close above. You're trading at 726.98. Now, if it doesn't close above that, is that a failure? It's a failure on price. It most certainly is not a failure on volume. What does that say? That says 727.97 in today's high would likely be tested again out here. But it also suggests to me, as I take a look at this, that it can't take it out, and it should be able to take it out, that maybe this trend, too, is coming to an end. Does that mean that it's going to pull back and give up the ghost? No, not necessarily. I would say, though, that this may qualify as a three-gap play. Let me see. The high on the trading day of July 17th is 664.27, and the low of the next is 665. See how you've got a gap out here, folks, between July 10th and July 13th, and then a very small gap. You need really good eyes, which I don't have, but I was able to spot it, and that was between July 17th and July 20th. Inside a three-gap play, that third gap has to be bigger, larger, both in percentage and dollar amount versus gap 1 or 2. So you have it. If, in fact, Chipotle were to give up the ghost, that says that price would go ahead and pull back somewhere into the 640 level out here. Is it going to do that? I don't know. Right now, it's moving into a swing point with volume. That's what I think that you need to go with. So I hope that helps out Danny in Atlanta when we take a look at the who wants to hold that hot pepper of Chipotle out there. Man, there are some stocks that are on fire, that are really in bullish mode out here. How about Citigroup? How about Bank of America? This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow, she is off 92 points right now. S&P is down 6. Composites off 35 points. It's been the Dow that is, well, the Dow and the Russell, right, that have been the weakest out here. If we look at a 30-minute time frame chart for the Dow futures, we can see that when it was making its high back here, you'll see that little price relative strength divergent pattern. Didn't get up to a 7th wave. It did get up to a 6th wave out here. But again, this is combining a number of different patterns and tools. as we take a look at this chart out here for the 30-minute time frame. And the reason why we're looking at it, the reason why I bring it up is when the Dow futures on a 30-minute time frame made a high, little price relative strength divergent pattern, little shooting stars, we get the bearish reversal. We then saw price actually break below a moving average line that it hadn't broken below for quite some time. And that now has set up the firestorm to the downside. But where we're at right now, no matter whether we come off of that high from about 2:30 in the afternoon is what it looks like. This is back on the trading day of July 20th, or if I come and take a look at a high out here from July 21st, no matter which one I use, as we take a look at our counts to the downside, it looks like we are about to get into a seventh wave to the downside. We just need a few more ticks below that low that took place at 11:30 this morning. That was 17,743. Just here, as we've been on the air, we've been down to 17,744. My system will automatically go ahead and punch up the next letter once we get there. Now, it just says it's something that, so we want to learn from what is the weakest. If we get down to that seventh wave, we see a bounce and it gets taken out, it suggests to you and I that we will continue to see some lower price over the course of the next few days out here on this, what we'll call a fairly orderly pullback in the summertime out here, some summertime, and before we see that next little bottom out there. And if you'd like to catch that, which I'd love you to be able to catch that, here's a little price relative strength divergent pattern inside the Russell 2000 on its 30-minute chart. We've seen more strength inside it. It too had been weak out there. So you got to love those patterns. But I too would love to take you along for the as the market makes its next bottom out here. I would think that you would want to participate in that, and then we'll go ahead and we'll prepare. Once we're in that, then we'll prepare for the other side of the trade, because there will be another side of the trade. There will be a nice top, and so for those of you that are calling for a significant pullback, I don't know how large the pullback will be. I do know that there will be one, and it may be fairly large. Crash? No. Move lower? Yes, out here, and you'll want to be able to participate in that one as well. I did mention there are some stocks that are just beauties out here. Bank of America, take a look at BAC out here. See if we can do this during the next minute. Bank of America taking out swing points with wide price spread and accelerated volume on a day like today. Hey, that XLF, we didn't take a look at it. I doubt it has an island reversal top like the XLK, but take a look at the December 31st swing point. That's where its high was that it's taking out. Of course, it's a light trading day, December 31st. 57 million shares. You're up and over it with 72 million shares. You know, folks, it's up and over a swing point with volume out here. Bank of America confirming potentially a very large A to B equals CD to the upside. We'd have to go back and really take a look at it. I don't have time right now, but stay tuned. Our man David White, he's coming up next. He's the squeezably, huggably soft. That's how he likes to describe himself, so I'm going with it. And stay tuned, because there is nothing like the power law vector indicator. Folks, have a wonderful Wednesday. I look forward to seeing you tomorrow afternoon. Be good, and we'll see you soon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.